Much of our capital remains concentrated in instruments that preserve liquidity without building productive capacity. Much of it sits in treasury bills of under 1 year. Governments still borrow at high nominal rates. Savers often earn returns that are eroded by inflation. And the long-dated assets that could transform our economies remain underfunded. That's a poor bargain for everyone. It's costly for governments, it's limiting for economies, and it destroys value for savers. So the issue is no longer whether African capital exists. The issue is whether we build a financial architecture that will allow African capital to finance African transformation. That means pension and insurance reform that genuinely opens room for infrastructure equity, infrastructure debt, regional infrastructure, and other long-dated productive assets. That means deepening local currency capital markets. That means building the public-private platforms through which domestic institutional capital can be mobilized into real projects. And that means credible risk-sharing solutions, guarantee programs, forced loss structures, insurance wrap, credit enhancement mechanisms, and investment vehicles that institutional investors can trust. Because capital does not move because we ask it to. Capital moves when risks are properly allocated and priced. Reform on paper alone will not be enough. Without trust, allocations will not follow. Without capacity, pipelines will not mature. Without scalable investment vehicles, domestic phasings will remain trapped in short-term paper. That is why AFC, working with our partners in the Alliance for African Multilateral Financial Institutions, and more recently, the new financial architecture for development being mobilized by President Sidi Outar of the African Development Bank, we will work together to build the mechanisms that will allow for us to de-risk and make mobilization of capital possible. Infrastructure is the engine of everything we seek to build. It is demand, the engine of industrialization. It is the engine of competitiveness. It is the engine of value capture, and increasingly, the engine of resilience. A continent that cannot refine its own fuel, produce enough of its own fertilizer, process enough of its own minerals, or transmit enough of its own power is a continent exposed to shocks it did not create. That is why Africa's infrastructure gap has become a resilience gap, and nowhere is this more visible than in fuel and fertilizers. Africa still imports far too much of both. That leaves our economies exposed to external price volatility, disrupted supply chains, foreign exchange pressures, and imported inflation. Yet, the fundamentals to resolve this dependency already exist. From Ethiopia to Tanzania, in short, within East Africa, we have significant hydrocarbon reserves that can support domestic and regional fertilizer production and petroleum refining. Across this region, the scale of demand is already large enough to support refining, petrochemical, and industrial platforms over time.